All right. So these are the three main things that you look out for, or these are checklists that you have to mark anytime that you open the charts. Okay. So okay, three main things to do. Okay, so the first thing is that you identify. I'm sure I have done this before. I've done this with you, but no problem. I just want you to. Okay, the first thing is to identify the market structure. Then the next thing is to mark the appropriate levels. Yeah. And then the next thing is to wait for entry confirmation. Okay. So these are the three main things that you do anytime that you open your charts. Okay. So before you enter any trade, make sure you have done this. If you don't do this, don't enter the trade. Even on your demo account, I want you to do this. Okay. Before you take any trade. So one, you should be able to tell the structure. Two, you mark the levels. And then three, you wait for entry confirmation. I'm going to take us through these three steps. Okay. We have done it before. So I believe that this time around is going to be easy. It's going to be very easy for us. Okay. If you don't understand anything, don't worry. Put it in the chat box. So when I'm done, you can ask and then I'll take you over that again. Okay. So our main task is to identify the trend of the market. Anytime that we open the chart, we have to be able to tell the trend of the market. Well, let me start from here. I didn't want to ask this because I already have arrows showing, so it will be easy to tell. But then let me just take them off and then ask if we still remember everything that we have done. Okay. So what do we think is the trend of this market or the structure? So the first thing we want to check this. What is the trend of this structure? Yeah. You can unmute and speak up. What's the trend of this structure?
Uptrend.
Okay, uptrend. Let me have at least three people. So,
Uptrend.
okay. And then the last person.
Uptrend.
All right. So we all agree that this is an uptrend. Okay. Now, the literal way of identifying the trend is to look at where it is going. Okay, the layman way is to use the arrow. If it is going up like this, it is an uptrend. If it is going down, it is a downtrend. That is the layman way of what identifying the trend. However, a more technical way of identifying the trend is to tell me that this is an uptrend because the market is forming series of higher highs and higher lows. And I want to believe if you have gone through the first four lessons, you should understand what I'm saying. The market has created series of higher highs and then higher lows. This tells us that this is what in a clear uptrend. So our first check is what marked is gone. Okay, then the next thing is what mark the appropriate levels. Okay, so let me tell you this today. When you mark a level, okay, when you mark a level, if the current market price is above the level, it is known as the support. If the current market price is above the level you have marked, it is known as a support. It means that if the current market price is below it, it is what? A resistance. Now, another thing that you should understand is that the moment the market breaks through your support level, it is no more a support, it becomes a resistance. The moment the market breaks through your resistance level, it is no more a resistance, it becomes a support level. Now, it is important for us to understand these things because we are going to buy from a support level and then we will sell from a resistance level. Remember this. We are going to buy from a support level and we are going to sell from a resistance level. Also, we are always going to buy in an uptrend, and then we are always going to sell in a downtrend. So under no circumstance must I see that you are buying in a downtrend or you are selling in an uptrend. Let us not do that. Okay, I want to believe that part is clear. So if this is an uptrend, then we are going to mark support levels because we want to buy. We want to buy. Okay. So this was the first higher high that the market broke. This was the second. And then this was the third. Then we have the fourth here. And we have the fifth. Then currently, this is the last one. But tell me something. Or let me just say it. Now I said something. I said that when the price, the current market price, this is the current market price. Usually it is moving. When you check here, you see that the numbers are changing because it's the live price. Okay. This thing, if it is below it, it is what a resistance. It means that this line that I have drawn here is not a support. Okay. The line that I've drawn there is not a support. Why do you always call me when I'm in a meeting? Hmm. Sorry about that. Okay. I hope that you can hear me loud and clear. All right, so all these levels that I've drawn are support levels because the current price is what way above them. But this one is a support, it's a resistance level. Now we have marked this in an uptrend. The reason is that we would expect the market to break it, and upon the break, it's no more a resistance. It then becomes what a support. So when it comes back to it, then we will take our buy from the support, okay, and then we follow it all the way to the top. That's the idea. So now let's just observe the past levels that we marked. If we had followed this, are we going to make something? Is that the question? Let me check that thing. Or someone's on this. Someone seeing the screen. Somebody said they are not seeing my screen. Is it the same with everybody or only her? I think it's blessing. Can you see my screen, please? Let me know.
Well, it went off for a while, but it's back again.
Okay, okay. Blessing, try to reconnect back to the meeting. I'm sure you will get it. Thank you. Right. So let's look at the previous levels that we marked. Assuming we were following just this idea, would we have made something? Yeah. So let's look at it. We marked this level. There was a break. Market didn't retest. So we would have missed this entry. Now we marked this. There was a break. Market came right there. So we would have gotten an entry from here. Okay. Now we marked this one. Market didn't come there. So we would have missed this. We marked this. There was a break, clean retest. And then it went in our favor. So at least the market would have given us two opportunities to enter this buy market. Two opportunities to enter this buy market. Now remember something. This is what the 4-hour time frame. Look here. We have H4 or 4 hours, right? It tells us that this is the 4-hour time frame. Okay. Now the 4-hour time frame is giving us these only two entries. But if we are to break it down, if we are to zoom to a more lower time frame, now let's do that. I'm going to go to 30 minutes, then we observe something. The moment I shift to 30 minutes, let's see what has happened. Now, we have a lot of what? Levels. Okay, so I'm going to delete. Okay, you let me keep them. And then we observe something here. Look at it. Okay, so this is where we started from. So the first resistance level, we have another one here. We have another one here. If we want to mark, there is one here. And then you just look at this space. You see that we have a lot of levels within this space. Okay, this tells us something. I will explain it later. Even when it came down here, started buying, it gave us a lot of levels here that we can mark, a lot of them. By the way, I gave you assignments and then only 3 people I think four people, only four people returned it. So the rest, I can't vouch for you whether you understood it or not. The four people that submitted the work, they did excellent job. Yeah. When I give you assignments, I'm not going to mark it. I just want to know that you understand what I am teaching you before I will add anything else to it. Okay, so please, when I give you assignments, make sure you return them. Okay, right. Now, let's see something here. From here, you can see that the same thing markets gave us a lot of what opportunities here. Right. And even the current market, we have the levels, we can mark them here as well. So what does this tells us? It tells us that it tells us that when we zoom to a lower time frame, we are going to find a lot of entries there. We will find a lot of entries, a lot of entries. But we are not going to take all the entries because most of them, if you don't take care, you will lose. If you don't take care, you will lose. The reason is that the levels on the higher time frame, they are stronger than the levels on the lower time frame. So what you have to do as a trader is that trade in line with the higher time frame. I will explain it further. Trade in line with the higher time frame. So if there is a retest on the higher time frame, go there, then you zoom to a lower time frame, and then you trade in line with that. Okay, then you trade in line with that. I will explain with more examples. Let me go to this chart and see something. Okay, so I'm going to go to the 4 hour time frame. Okay, now this is the 4 hour time frame. Look at it. So you can see that for the benefits of time, let me just tell the trend. This is a clear down trend. I know that you know that as well. And then we can see, we can mark the levels. We have nice lower lows here, beautiful ones. They are very easy to spot. So by the way, if you have to struggle with identifying the level, okay, where to mark it, it means it is wrong because it should be obvious enough to spot it under 5 seconds. So when I look at the chart in 5 seconds, I have to be able to tell the trend. I have to also know exactly where to place the levels. Mm? I have to know where to place the levels. So you see that here we have a lot of them forming. Nice structures. Nice structures. And if we had followed this cell, we would have gotten a lot of entries. You know, beautiful, beautiful. Nice ones. Now I want to explain something to you. So I'll take you to Telegram, which I'll take you to my signal channel. So this is my signal channel where I provide signals for my students. This one is for Ghanaian students. Now I'll add you guys to it, but we have to complete the lessons. I have to make sure you understand what I'm teaching you before I give you the setup. But then I want to show you something. I shared something with them this morning. So this is volatility index 25, this one, 25 1x. And then I did something like this. Let's go and check what happened over there. 25 1x. So this was 25 1x, right? And then let me confirm the time frame is 15 minutes. So 15 minutes. Okay, great. And then on the 15 minutes, I illustrated that we will wait for price to come here. If you look at the image that I sent to them, let me go back so you check it. See, this is it. So as at the time I did it, we didn't have this pullback. We didn't have it, right? But then I said that we wait for price to, push here and then we take the sell. I want to use that to explain something to you. Okay, so that is exactly what happened. You see, the market was here as at the time I did it. It messed up right here. Okay, within this space, it's messed up, but then got right into the block, and then you see that it has started selling, and we expect it to sell even more. Okay, now let me go to, let's say, 1 hour. Let me go to 1 hour. So you see that on 1 hour time frame, we can tell that it is a clear downtrend, and then we can start the marking. Let me delete this first. Let me delete it. So we have clear down structures here. We have this coming in. We have this one as well. Then we have this. And then this one is very small, but still there was a rejection there, so it counts. Okay. So why did I zoom to the 15 minutes? So this is what I was trying to say. You know, when you trade on the higher time frame, what you are doing is that you are increasing your risk. And you understand what we mean by that. You are increasing your risk because when you take a trade in a downtrend, okay, you see the levels we marked, we are saying that these are resistance levels. We are placing them at where the lower lows, which is a concept we have already spoken about, the lower lows. Ideally, when you enter from the lower low, you have to put your stop loss above the lower high. You have to put your stop loss above the lower high. And so you realize that if you trade with, on the higher time frame, the stop loss has to be widened. For example, I mean that if I am to take a sell from here and the normal circumstance per the rule, this is where I should have my stop loss. And what we have here is a lot of money. This thing here, the difference is what? A lot. If you don't take care, this whole thing can blow your account. However, when we zoom to the 15 minutes time frame, we break that risk down further. So let's look at the 15 minutes. So back to this, you see this thing. You see the space, just something small, right? So over here, I'm rather using the 15 minutes reference point. By the way, what I've drawn is called an order block. And this one, I don't normally teach it because I want you to have this as a reading assignment. So you can go to YouTube, type order blocks or fair value gaps, order blocks and fair value gap. You have a lot of lessons on that. Just go over it, you understand it. Then you come back, you understand the lesson better. All right. So I rather want to take my entry from the 15 minutes order block. In this case, I'm going to enter anywhere in the block where my stop loss right above the block, okay? And then my TP, I can widen it as much as I want because this is a clear cell structure. Right. Now, if you check the first one I did, the difference was over 7,000, which means that even if you use the least loss side, that is about $70. So if you have just $50 in your account, it means you cannot take that trade because the risk alone is bigger than your capital. However, this one, the risk is about $24. This is about $24. And if you have $50, that's the trade that you can take. Okay, you can even break the lot size down further so that you reduce the risk more. So what I'm trying to say here is that after identifying the trend on the higher time frame and then marking the level, you can as well zoom to a lower time frame so that you break the risk down. So I've introduced a new concept you may not understand. Stop loss, and the next thing is take profit. What are they? Now, you are predicting that because the market is in a downtrend, it's supposed to go down. That's your prediction. Now, there is no guarantee that that's exactly what is going to happen. So the market can decide to go up instead. All right, it may not go down, it will go up instead. If that happens, it means you are going to lose money. So what you do is that you put a restriction on your account that, okay, I have $100 in my account, but this trade that I'm taking, I want to risk only $15 on the trade. So that is what we call the stop loss. So the trade that you are taking, the amount you want to risk, you use it as what your stop loss. So you can calculate it and then know exactly where to place the stop loss so that your risk will be exactly $15. Your risk will be exactly $15. It will not be more than that. I don't know if you get the concept. So the stop loss is how much you are willing to risk per trade. And then we have what we call a take profit. Now the take profit is how much you are willing to make from the trade. So if you are risking $15 on the trade, then definitely your target should be more than $30. It should be maybe $45, $60, or even $75. It depends. It depends on the risk to reward ratio. So when we talk about the risk reward, we mean comparing the risk to your reward. So it's like comparing the stop loss to the take profit. All right. And always your stop loss must be lower than your take profit, or your take profit must be higher than your stop loss. I don't know if this concept is okay. I don't know if you understand this. Okay. So I'm going to repeat it. I said that we have learned to buy and sell. And then we have learned that we are going to buy in an uptrend, we are going to sell in a downtrend. Now, there is no guarantee that in a downtrend, when we sell, the market is going to go down. There is no guarantee. There is no guarantee that in an uptrend, when you buy, the market is going to go up. So in case the market doesn't go down in an uptrend, but then we have taken, sorry, in a downtrend, but we have taken the sell market, it means we are going to lose money. How much of our money, our capital, are we willing to put on the trade? That is what we call the risk. And that we represent it by the stop loss. So you set your stop loss so that it will be the same amount of what risk that you want to take. So if your risk is $20, put it there. If it is $50, put it there. So today, I told you I made $500, which I shared with you in the group. How much did I risk on the trade? I risked $100 on the trade. So I was risking $100 for $500. So if the trade had not gone in my direction, I would have lost $100. Fortunately for me, it did go in my direction and I earned $500. So that is what we mean by the stop loss and then the take profit. I think there is a hand up or a question, something like that. I heard that. I'm seeing it now. Okay. Or did I go off again? Okay, so that is the difference between the stop loss and the take profit. And this is the reason why you have to break your trade down to the lower time frame. I want to believe that you get the concept now. So even though we are going to use the higher time frame to identify the trend, we will use the lower time frame to take the trade so that we can reduce the risk. It is very important we understand that. Okay, right. So we've looked at just two examples. Let's look at least three more, then I'll give you the chance to ask your questions. Okay, so I have 51x because I have analyzed this. Okay, so again, this is what a clear sell market. It is a clear sell market. And if I ask you to mark the levels, there are a lot, but I'll start from here. Very, very simple, very easy to identify, very easy to mark. Yeah, if it has to take you more than 5 seconds to tell the trend to mark the levels, trust me, it is not right. It's not correct. Don't use it. So these are levels I've marked on 4 hours, but I'm not going to trade on the 4 hour. So I'm going to zoom to a lower time frame, which I use the 15 minutes for my entries most of the time. Okay, so I'll come to the 15 minutes. Look at what has happened here. On the 15 minutes, you see that it is in line with some of the levels here, but not all of them. Okay, not all of them. So I can adjust them. So over here, I have another one here, this one. Then I have this one too. Okay, I have this one as well. All right. So instead of using the break and retest on the 4 hours, I can use the break and retest on the 15 minutes. Okay. Yeah. So it is not all the case that you find an order block. Sometimes you do find some, like in this scenario, there is another block here. So I would have taken my entry from here, which you could use as a break and retest because this was a retest to this level. So you could have taken the sell. Yeah. So you find a lot of entries from here. So if nothing at all, this would have given me an entry. Yeah. In fact, I shared this sell with my people. Yeah, we were waiting for it, only that it didn't get to our entry, so we missed it. Yeah, we missed the entry, but it's going to sell for a long time. It is going to sell for a long time. This is how you are going to do it. Identify the trend on the higher time frame, zoom to the lower time frame, and make your entries from there. You're going to use the 15 minutes for your entry. Yeah, you are going to use the 15 minutes for your entry. So this is another market. Let's look at different one. Let me see this market. Hmm. Okay, so I'm not going to go to the lower time frame. Sorry, the higher time frame. I'm going to use this one because the lower time frame may confuse you. I'm sorry. The higher time frame may confuse you because I know that if I to am to ask you what is the trend of this market, everyone is going to say it is a downtrend, and you are correct. Yeah, you're not wrong. This is a clear downtrend. However, it is changing direction, and I have seen it. I have seen that it is changing direction. I have seen it. So I am taking advantage of what? The change. So it means that I'm taking the buys even before it confirms, like it becomes very clear to the ordinary that it is a buy market. Okay. So this morning I posted this buy structure. Or was it yesterday? I posted it on my platform that they can look for buys and then they enter. So I currently, as we are speaking, please, if you have any question, you can hold on with that. So I'll be done in a few minutes and then you can ask your question. Yeah. Okay. Unless you can see my screen. If that's the case, let me know so I will check it. I'll give you the chance to ask your questions. Mm, right. So yes. So this buy, like I said, it has already started. But then I saw it yesterday. Okay, I saw the buy yesterday. I shared it with my people. And if nothing at all, this you can mark this, 15 minutes level. You can mark it. You can mark all these things. And then you can trade them using the break and retest. But personally, I use the block entry. So I picked my entry from here using this. Now you see that this one has reduced the risk drastically. If I'm to use a higher time frame, it is going to be higher. Okay, if I use the higher time frame to pick the entry, the risk is going to be higher. But I use the lower time frame, and it reduces the risk drastically. Okay, it is very easy. I think. Yeah, let me check. I think I shared it yesterday. So it's, yeah, 75. So you see, I am expecting that it will push all the way into this block before it sells, right? Push into this block before it sells. So as of the time I saw it, the price was 26,000. So let's check it. 26,000. Where was that? So we had 26,000 here, and I anticipated that it was going to go up, and that's what you can see here. As it stands now, we are around 27,000. So it is going up, and it will go up until it gets to um, our level, and then it will resume the sell. So we are taking advantage of that buy. Okay, from here. Okay, so the same way, if I want to check the risk to reward ratio, this is a buy position. So I enter somewhere here where my stop loss right below the block, and then my TP can be anywhere I want. So in this case, the risk reward ratio is what? 14 is to 1. What this means is that if I'm risking $10, my target is $140. That is what it means. If I'm raising $100, my target is 1,400. That's what it means. Okay. So if you really know what you are doing, okay, you can break down the risk, make it smaller, whilst you what do you call it? Magnify your profit or your targets. Yeah. So let's learn to understand how to transition from the higher time frame to the lower time frame, and it's going to help us a lot. It's going to help us a lot. Let's look at one more example. So which markets? Yeah, I think we started with this one. Yeah. We started with this, but we started on the 4 hour time frame. And then we confirmed, all of us confirmed that this was an uptrend. And then I said we can zoom to a lower time frame and then we see how it behaved. Yes, so the same way with the block entry, if you really understand it, then you know that there was an order block here, And you see, when the price retraced from here, it went straight into the block and boom, the buy started. So if you knew about this, you would have joined the buy from here and see you'll be up by good profit by now. Yeah, you should be in deep profit by now if you saw the buy from here and then you entered. Okay, so I've given you an assignment. I said that go to YouTube, watch videos on order blocks and fair value gaps. Yeah, order blocks and fair value gap. It's very simple and easy to understand. Yes, but I want you to do that on your own. When you have done that and you don't understand it still, then you will come to me, I'll explain it to you. Okay. All right. So that is that. So we are going to check the trend from the higher time frame, then we translate it to the lower time frame and we take our trades from there. We look at the trend on from the higher time frame, we zoom to the lower time frame, and we pick the entries from there. The reason why we are doing that is that we want to reduce the risk. When we go to the lower time frame, the risk becomes smaller. Okay. All right. So that's for this evening. If nothing at all, remember I have talked about um, the three main things that you look out for whenever you open the charts, or the three main things that you have to do. I think it's gone. The first is to identify the market structure. The second is to mark the appropriate levels. And the third is to wait for entry signal. I think I didn't talk about the entry signal. So what is the entry signal? Yeah. So I have marked my level on the higher time frame, and then I have zoomed to the lower time frame to find an entry. So on the lower time frame, let's say I'm using this as an example. I have found this order block. Okay, I'm going to trade using this order block. So what confirmation am I looking at? Remember that when the market is coming to the order block for my buy, it is coming as a sell structure. It's coming as a sell structure. So what are the things that I have to see before I'll take the buy? So once it is printing the bearish candles, don't take the buy yet. Wait until the market tells you that, yes, I am ready to change direction. I'm ready to turn around. How do you confirm that? You see, when the market entered the block, it gave us a bullish candle. I mean, the white ones. It gave us three successive bullish candles coming out of the order block. So this is a confirmation to me that it's going to buy. Another confirmation you can use is the rejection candle. I don't know if I share the candlestick trading Bible with you. Candlestick trading Bible. When you read that, you will see all the rejection candles. So one of them is the pin bar. When you see the pin bar in the block, it has a smaller body with a longer lower shadow. That tells you that the buy pressure is on. When you see something like that around a zone like this, you are sure it is going to buy. So those are the kind of confirmations you are looking out for. So they are called candlestick confirmation. You have to read to understand them. So if you don't have the book, I will share it with you again. Let me just do that right now. I'm sharing the book in the platform, on the platform. Um, just go through it because it talks about all the candlesticks, all of them. I want you to know them so that you know um, the rejection candles that I'm talking about. Yeah, it is very important. Mm. I think I shared it earlier, but for the benefit of the new people who have joined, in fact, for my class, my people, I start from here. That's the first thing you have to do. You have to read this book before I hold any live session with you. Yes, but you are coming from a different background. We had to start from somewhere. That's why we started with financial literacy before we got into the real deal. And even the live sessions, it's becoming boring. Most people are not joining. Imagine we had started with reading a book. Most of you would have run away. Yeah, so there is a reason we do the things the way we do it now. Right. But at least those of you here, I know you are serious about this. Just go through the book. Okay. That book over there, that is what changed my story. That is what made me a good trader. And trust me, if you take your time to read it, to understand, not just going through flipping the pages, no, try to understand what is in there. And believe you me, your trading should change. Yeah, it should change. Right. So this is how we are going to trade going forward. Okay. This is how we are going to trade going forward. So your assignment, aside going to Facebook to watch videos on fair value gaps and then other blocks. Um, so let me write them here. So I mean other blocks. In short, we call it OB. And then fair value gap, fair value gap, or FVG. Okay, these two, watch videos on them. Okay. Aside doing this, I want you to go back to the chart, identify the structure, mark them like you did. So H4, mark them, then go to 15 minutes and mark them again. It means that you will submit two charts to me. One on the 4 hour, telling me the trend, and another one on 15 minutes, telling me where you would enter the trade. Exactly where you will enter the trade. I want to believe it is clear. So do this assignment for me so that we understand that what we are doing here. Okay, so I'm going to pause here and then I'll give you the opportunity to ask all your questions.